Alphabet just hit new all-time highs just a few days ago, topping out at $291.93. The stock's up nearly 60% over the last year, and everyone's asking the same thing. Can this momentum actually last? Because here's the deal as I see it, right? Alphabet isn't just about Google search anymore. It's AI, it's cloud, YouTube, Android, hardware, and about a dozen billion-dollar ecosystems all firing at once. And last quarter, they crossed $100 billion in revenue for the first time ever. It's up 16% year over year. Profit jumped 33%, hitting $35 billion. And Google Cloud, it's on fire. A $15 billion a quarter business with a $155 billion backlog. But here's something almost no one's talking about. Alphabet's spending is exploding. Management raised their 2025 CapEx outlook to over $90 billion, and they're saying it'll go even higher in 2026. Why? Because they are going all in on AI. Their Gemini models now process 7 billion tokens every minute, and AI is rolling into search faster than any product launch in company history. And that's massive, folks, but it's also really risky. Wall Street, they're calling the stock a strong buy with a high price target of around $310. It's about 10% upside from here. But with spending climbing this fast, you have to ask yourself, is Alphabet buying its future, or are they just borrowing against it? And that's what I'm breaking down today. The numbers behind Alphabet's AI bet and whether this stock can keep climbing from here. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That is a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. All right, so with all that out of the way, let's dive in. Alphabet, of course, is the tech giant behind one of the most powerful ecosystems on the planet. And it's not just big, it's everywhere. As Google's parent company, they run everything from search and ads to cloud services and hardware and a growing lineup of future-focused tech projects. In other words, they touch nearly every part of the digital economy, whether you realize it or not. Now, they're also part of what's known as the Magnificent Seven, and that's, includes Apple, Microsoft, Amazon, Meta, NVIDIA, and Tesla. And these are the companies that are moving the market today. They dominate key industries. They lead in innovation and make up a huge portion of major indexes like the S&P 500 and the NASDAQ. And when they make a move, the market follows. So when Alphabet hits new highs, it's not just a win for shareholders. It sends shockwaves through the market. Now, Alphabet runs a massive tech ecosystem, and they organize it into 2 main business segments. That's Google Services and Google Cloud. And then, of course, there's Other Bets, which covers their big experimental projects like self-driving tech, life sciences, and next-generation research. Think of that as the moonshot lab that could one day create the next trillion-dollar idea. So let's break it down into simpler terms, right? Google Services, that's the main revenue driver. This is everything that people use every single day. Search, YouTube, Android, Chrome, Gmail, Maps, Drive, Photos, and of course the Google Play Store. It's the advertising that brings most of the cash here. But Alphabet has been building strong subscription and hardware businesses as well, with offerings like YouTube Premium, YouTube TV, YouTube Music, NFL Sunday Ticket, Google One, and of course the Pixel device family becoming bigger contributions or bigger contributors over time. So that advertising, it fuels the engine, but it's the subscriptions and the devices that are starting to turbocharge it. And that's the key. Multiple profit streams mean long-term stability, not just ad dependency. Now, let's talk about Google Cloud, right? Which is really the engine driving Alphabet's long-term growth. This is the part of the business that earns money from the pay-as-you-go usage and enterprise subscriptions for infrastructure, developer tools, and AI-powered software. In simple terms, it's the platform that helps companies build, scale, and innovate for the future. And the kicker? Cloud isn't just about hosting websites, or at least not anymore. It's the foundation for AI. And Google Cloud isn't just about storing data or running servers. It delivers powerful AI optimized infrastructure that can handle massive workloads, plus developer platforms that can let teams create and launch applications at a global scale. Of course, if you sprinkle in some high-performance data analytics tools, and businesses can now process information faster and make smarter decisions at every single level. In English, Google Cloud gives companies the supercomputing power without needing their own servers, and that's why demand keeps growing. On top of that, Google Cloud brings advanced cybersecurity built with AI to stay ahead of modern digital threats. It also offers intelligent, purpose-built smart apps that use machine learning to streamline workflows and accelerate innovation across a wide range of industries. And of course, the more AI grows, the deeper cloud becomes embedded in how businesses run. And that is the long-term stickiness. And it's what investors like you and me love. So Alphabet, of course, is more than just Google search. The company is an innovation platform that touches nearly every part of the digital economy, from ads and entertainment to AI and enterprise computing. And the real question is how much bigger can a company this massive still get? Well, let's find out. Alphabet stock recently closed around $282, and it reached an all-time high of $291.93. And that's a record breaker. And anytime a stock hits all-time highs, people start asking if it's time to buy more or take profits. Now, year-to-date, the stock is up about 48%, while its 52-week performance is up 60%. And momentum like that, it doesn't happen by accident. It happens when a company is executing hard. So Alphabet reaching all-time highs, with all that, what could push the stock higher? And it's a question I got a lot in my Discord channel recently. Well, they just released their third quarter numbers, so let's have a look and stick around, because this is where the numbers start telling the real story. Alphabet brought in $102 billion in revenue this quarter, up 16% from last year. This is also the first time the company has crossed the $100 billion revenue mark in a single quarter. This is a major milestone, not just growth, it's dominance. And profit, it's climbing too. Net income jumped from $26 billion to $35 billion. That's a 33% increase year over year. And that translated to $2.87 per share in earnings, or earnings per share. So yeah, double-digit revenue growth and profit acceleration. That is the dream combo. Now, looking at the numbers, we can see that Google Services segment contributed around $87 billion to this quarter's revenue, while the Google Cloud segment contributed around $15 billion. And that split tells you everything. Ads still pay the bills, but cloud, it's the future. Alphabet's management also says that its full-stack AI strategy is starting to pay off in a big way. And they highlighted major momentum, including the global rollout of AI Overviews and AI mode in search, which launched faster than any other product of its kind in the company's history. That is a sign of confidence and execution speed that most companies can only dream about. And of course, the company's Gemini models are also scaling hard. They're now handling 7 billion tokens every minute through direct API use from customers. And the Gemini app continues to grow, now reaching over 650 million monthly active users. That's a lot of people. So if you're wondering what all that means, it basically means that the AI engine that powers everything from search to productivity and usage like that, well, it just shows real world adoption. Management also pointed to strong growth in newer business lines. Google Cloud accelerated again this quarter and now has a massive $155 billion backlog. On top of that, the company has over 300 million paid subscriptions, led by Google One and YouTube Premium. And that's recurring revenue. That's the kind that Wall Street loves because it compounds every single quarter. Now, on the spending side, Alphabet is dialing up investment in a pretty big way. They raised their 2025 capital spending outlook to between $91 and $93 billion, mostly to build out infrastructure. And they expect, of course, CapEx to climb even higher in 2026. So Alphabet, they're not just investing in growth, they're betting the house on AI. Management also stressed that they're staying focused on efficiency and productivity so they can continue funding their massive push into AI. So in other words, yes, they're spending more, but it's strategic spending, not reckless. And that's a critical distinction. So that's the latest financial update from Alphabet. If you like this kind of videos, of course, I will be covering more as other companies report. But before you go, I'm sure you're wondering if Alphabet stock is a buy at these levels because Wall Street, they have some strong opinions here. A consensus among 56 analysts rate Alphabet a strong buy with a high target price of $310. So that suggests about 10% potential upside from the stock's latest closing price. The average score is 4.59 out of 5 and is relatively unchanged over the last 3 months. And that stability says a lot. Analysts aren't backing off, even after a massive run. And Alphabet, I see them firing on all cylinders, right? They're showing that its full stack AI strategy is not only about working, but gaining speed fast. And with huge adoption for Gemini and rapid AI rollouts in search, strong momentum in Google Cloud, and massive subscription base, the company is clearly positioning itself at the heart of the AI economy. Alphabet isn't chasing AI, it's defining it. Even though they're increasing their spending to support growth, I see management, well, they're emphasizing discipline and efficiency. And this signals that this is not just an uncontrolled expansion, but rather a focused and strategic investment in staying ahead as the leader in AI. And I see that as exactly how you want to stay dominant in tech. Calculated risk, massive upside. But what about you? Do you think Alphabet's aggressive AI bet is going to keep it ahead of the competitors over the long run? Let me know in the comments below. And while you're there, don't forget to hit those like and subscribe buttons if you found the video helpful, because it'll help others find the video. It'll support the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.